What's going on? Welcome to another geopolitical analysis video. Today we dive into the relationship of Bitcoin with the USDT dominance. This is going to be an interesting one for you guys as we explore the relationship of those two. Okay, so let's look at the price of Bitcoin right now quickly. 94,000. Okay, it's hovering just above 94,000. We don't know. We don't know what can happen here. We can have explosions all the way up to 113K, 120K and top there. Or this could have been the top, 108,000, and now we're moving lower. Okay, we don't care at this point of time. What we care is what happened in the past when Bitcoin topped. Let's look at that. Let's investigate. So the two topping dates that we can assume based on the price here was April 12th, okay, the week of April 12th, and the week of November 8th, 2021. So let's look what happened with the USDT dominance chart. Okay, so this is the market cap of USDT dominance. This shows how much liquidity is in stable coins, and this of course has an inverse relationship, meaning that when Bitcoin is at the all-time high, USDT is in the all-time low, right? Because there's less stable coins, less money in stable coins. Everything is in Bitcoin or crypto. But let's look this example here. Okay, so we said April and November. Okay, during that time of 2021, in April, okay, that week of April, week 5th, the 12th, we were, let me zoom in for you guys, we were hanging around over here. So the dominance was just above 2%, 2.2, 2.3% dominance. Okay, so this is the range you were when Bitcoin was at the all-time high, okay? When it was 65,000, 64,900. And when it double peaked later on in November, 69,000. So you were at the peak in November 2021, first week, second week of November, you were here in this zone. So just above 2.4%. In April of 2021, you were just above 2%. So if we take that relationship of the two and look at where we are now, about 3 years later, we'll see that the relationship of the two is standing way above 3%. So there is room for speculation that until Bitcoin reaches this zone here of 2% and 2.4%, there's still room for another 50% move of stable coins to move into Bitcoin and into further crypto. What would a 50% move you think translate in? Well, this 50% move would definitely generate enough momentum for Bitcoin to catch a move into higher all-time highs. Okay? This would be the move you could expect. This is the zone that the Fibonacci's indicate. The next move, 113,000, 120,000. So we could see a significant move from the stable coins, right? Because what I'm noticing here is you're seeing tremendous dropping volume here. You're seeing that the charts are showing lower lows and are showing you that there's a lot of selling pressure in the dominance. We're in a downtrend, okay? The downtrend hasn't hit a bottom yet. So we're in a local downtrend here when it comes to the dominance of the market cap. When you compare it to Bitcoin, yes, you have hit this higher, let me take that away. Yes, you have hit these higher prices, massive selling, but overall, if you look at it on the weekly, you're sitting above, comfortably above 94,000, and we can see that anytime the price was at 94,000, 90,000, there was tremendous selling pressure. You could see these wicks here, they indicate the buying pressure, excuse me. Now, also if you look at, let's look at the daily, the volume has been declining. So the volume has been declining of buying and selling, meaning that this is sort of the zone where people who were to sold have sold already, people who were to buy have bought already. So there's a bit of stagnation here, and we're just meandering in this level here. Now this could take us further down to 87, if not 84. 80, 84, 82, this zone. But before that, you would expect some type of bounce. Okay? After the selling pressure, you would expect a stronger bounce, perhaps in the new year. But like I've said before in many videos, in the previous videos, it all depends on what the dollar is going to do and what the interest rates are going to do. Because I told you, if December closes above these highs here, if December closes well above these highs or close, you could expect much higher prices in interest rates, seeking this double top pattern. Okay? And right now we're in a position where risk is pointing towards flight of capital from equities. Okay? Sure, you might say, well, let's look at the money supply. What's going on with the money supply? Yeah, it's been growing. But this effect of cutting so fast the money supply perhaps hasn't been felt yet. And this upward trajectory of the money supply may not be felt as well until much later. So when we look at the stock market overall, the NASDAQ, the SP 500, the Russell, it's not surprising to see this selling pressure here take place. Yes, this might be tax loss, selling. This might be the tactics of people who made a lot of money, selling some positions, selling at a loss some others, and in order to avoid taxation. Yeah, these are many tactics that happen at the end of the year. But interest rates are signaling that risk is in all-time high territory. Okay? Unless we see the Federal Reserve and other central banks buying and lowering the interest rates, okay, by buying bonds, we're not going to see a relief rally. And hey, let's look at what happened last time when the interest rates in April were this high. Boop. Okay, April. I know you can't see it now. Is it April or October? Yeah. Let's look what happened here. October 2023. Okay. The stock market. Let's look at the 10-year. October. Well above 5%. was it October 2023? Yeah, October 2023. Well, October, yeah, October 2023. Look, all the way down. Look at this drop. Look at this drop. We had a significant drop starting from July down here. Let's take this price drop. Okay, this is well over 10%. This is a 15-20% drop. Okay, and then the markets rallied extraordinarily. So what I'm trying to say is that if you get up here, then you must expect that this market is gonna drop all the way down here at least. Okay, so you're gonna see a 15-20% sell-off. Very possible. It's very possible. That's why it's important to look at the interest rates and of course the strength of the dollar, because that indicates the sentiment. People who are holding a lot of capital. Okay, why would somebody who has a lot of money risk in the markets when they can get this yield risk-free? Do you rather risk your capital dropping 15-20% or just getting a 4-5% yield risk-free? Smart money is doing that. I bet you smart money is probably on the sidelines or getting some yield. Because in this environment, lending is expensive, and lending is only available for those who have proper, healthy money inflow as a corporation, as a company. And overall, people lending, because think about it, these are the federal rates. The bank rates are higher than these. The banks have to make their own money, so they will add percentage points here. So nobody right now is borrowing money to put in the stock market. Nobody. There's no risk reward game here. Okay, the ratio here is skewed. It's not favorable. So unless we see a tremendous drop like that, which is possible, I do think that the fact that we are engulfed in this red candle, we should expect to see another measured move down here. So my guess would be that in a month's time, if not two, we're somewhere over here, 565, 550. If not, then that would mean that the interest rates have dropped in order for us to see a much bigger rally to break out. But the odds right now are showing us that the dollar is very strong and the interest rates are strong. That's all I got for you guys. I hope you enjoyed the BTC price with the market cap dominance of stablecoins and the relationship again. What happened when interest rates spiked to 5%? What was going on in the markets? So as you can tell, we have perhaps more pain to endure. Thanks so much for following. Subscribe, like, comment. See you on another video. Bye, guys.